Imagine this. You wake up on a Monday, your alarm doesn't ring, your boss doesn't exist, and yet $50,000 quietly lands in your bank account every single year for the rest of your life. Not because you're lucky, not because you won the lottery, but because you understood one simple formula that most people never even hear about until it's too late. That formula is called the FIRE formula. And if you want to live on $50,000 a year forever, without ever worrying about running out of money, this might be the most important 10 minutes you spend this year. So let's start with the blunt truth. Most people are building their entire life around the wrong number. They obsess over salary, promotions, and net worth, but never stop to ask how much money do I actually need my investments to generate every year? That's where the FIRE formula changes everything. Here it is in its simplest form. FIRE number equals annual expenses times 25. If you want to spend $50,000 per year, the traditional FIRE world says you need about $1,250,000 invested. Sounds huge, right? But stay with me, because by the end of this video, you'll see why that number might be lower for you and why your spending is actually more powerful than your income when it comes to speeding up your FIRE date. Let's break this down like you and I are sitting at a table with a notepad. You say, I want to live on $50,000 a year, forever. Not for 5 years, not until I'm 65. Forever. How do you turn a pile of money into a stream of $50,000 per year that doesn't run dry? This is where the famous 4% rule comes in. The 4% rule basically says, if you invest your money in a diversified portfolio of mostly stocks and some bonds, you can withdraw about 4% of it every year. Adjust that amount for inflation. And historically, your money would have lasted at least 30 years in almost every scenario we've seen in the past. Now, if you flip that math around, 4% is the same as 1 divided by 25. So if you want to know how big your money pile needs to be, you just multiply your annual expenses by 25. So you want $50,000 per year. 50,000 times 25 equals $1,250,000. That $1.25 million is your classic FIRE number. That's the point where, in theory, your investments can support $50,000 a year for decades without you needing to work. But here's where the video gets interesting, because that is the textbook number. And textbooks don't know you. What if I told you that you might not actually need $1.25 million to live your $50,000 lifestyle forever? Let's bring in the dividend investor's advantage. Most FIRE calculations assume you're selling a small slice of your portfolio each year to fund your spending. But dividend investors think a little differently. Instead of selling shares, they focus on building a portfolio that pays them in cash, dividends, every year. Imagine you built a portfolio of solid, diversified, dividend-paying assets with an average yield of 5%. That means for every $100 invested, you get $5 in cash every year without having to sell anything. Now ask the question again. How big does my portfolio need to be to pay me $50,000 per year at a 5% yield? The formula shifts slightly. FIRE number equals annual expenses divided by yield. So $50,000 divided by 0.05 equals $1 million. Suddenly, the magic number isn't $1,250,000 anymore. It's $1 million. That's $250,000 less you need to accumulate. That could shave years off your FIRE date. Now, is a 5% dividend yield guaranteed? No. Should you chase risky high-yield junk just to hit 5%? Definitely not. But this is the idea. The way you structure your investments changes how much you actually need. And we're still not done lowering that number. Because your future pension, Social Security, or rental income can slice your FIRE number even further. Before we talk about that trick, we need to understand something most beginners get wrong. People think FIRE is about becoming a millionaire. It's not. It's about covering expenses. If your expenses are high, your FIRE number explodes. If your expenses are low, your FIRE number shrinks dramatically. Let me show you how brutal and how beautiful this can be. Remember our formula. FIRE number equals annual expenses times 25 for the 4% rule. Let's look at the FIRE spectrum that many in the community talk about. Poverty, FIRE, around $15,000 per year in spending. Lean FIRE, about $36,000 per year. Regular FIRE, $50,000 per year. Fat FIRE, $100,000 or more per year. Now plug these into the 25 times rule. Poverty FIRE, $15,000 times 25 equals $375,000. Lean FIRE, $36,000 times 25 equals $900,000. Regular FIRE, $50,000 times 25 equals $1,250,000. Fat FIRE, $100,000 times 25 equals $2,500,000. Notice what changed. Not the withdrawal rule, not the stock market, not your investing skill. Just lifestyle. Just spending. You can double your path to freedom or cut it in half simply by changing how much enough costs you. That's why the key insight in the FIRE world is this. Your spending controls your FIRE timeline far more than your income does. A person earning $80,000 but living on $35,000 can beat someone earning $200,000 but spending $190,000 every year. The second person looks rich. The first person becomes free, but what if you're more conservative? Some people don't like the idea of planning their entire future on the 4% rule. Maybe they're younger and need their money to last 50 or 60 years. Maybe they're worried about low future returns or higher inflation. For them, there's a more cautious version, the 3% rule. Same idea, different math. Instead of assuming you can safely withdraw 4% per year, you assume 3%. That's basically saying, I want a bigger cushion. I don't want to stress about every market crash. Now the inverse of 3% is about 33. So the conservative FIRE formula becomes FIRE number equals annual expenses times 33. Let's run our numbers again for $50,000 per year. $50,000 times 33 is approximately $1,650,000. So depending on how conservative you want to be, living on $50,000 a year forever means somewhere in the range of $1 million to $1,650,000, depending on yield, withdrawal rate, and risk tolerance. Now let's bring in one of the most underrated hacks, other income streams. A lot of people forget that they won't be relying only on their portfolio. Maybe you'll have a government pension, Social Security, a small corporate pension, rental income from a property, royalties, a side business, or part-time consulting. These cash flows work like a discount on your FIRE number. Here's how. Let's say your dream lifestyle costs $50,000 per year, but you know that in retirement, you'll get $24,000 a year from a pension or Social Security. Instead of planning for the full $50,000 from your investments, you only need your portfolio to cover the gap. $50,000 total desired spending, minus $24,000 from pension and other sources, leaves $26,000 that your portfolio needs to produce. Now plug that into the 25 times formula. $26,000 times 25 equals $650,000. Just like that, your FIRE number dropped from $1,250,000 to $650,000 because you accounted for income you're already going to receive. And if you're a dividend-focused investor and you want to cover that $26,000 purely from dividends at 5% yield, the math looks like this. $26,000 divided by 0.05 equals $520,000. That's the power of stacking passive income streams. Every predictable dollar you can generate from outside your portfolio is one less dollar your portfolio has to work for. So now the real question isn't, how do I get to $1.25 million? It's what mix of lifestyle, yield, and other income gets me to FIRE the fastest without stressing me out. Let's bring this back to you. You're watching a video titled, The FIRE Formula: How Much You Really Need to Live on $50,000 per Year Forever. What we've learned so far is the classic answer, around $1,250,000 using the 4% rule. A dividend-tilted answer, around $1 million at a 5% yield. A conservative answer, around $1,650,000 using a 3% rule. A pension-adjusted answer, possibly as low as $650,000 or even less if other income exists. So where do you land on this spectrum? Let's walk through a quick thought experiment as if we're building your FIRE plan right now. Step 1. Define your real $50,000 lifestyle. When people say, I want to live on $50,000 a year, they often pick a round number without actually breaking it down. But FIRE planning is built on reality, not vibes. Ask yourself, where would you live? City, suburb, smaller town, or another country? Are you renting, owning, or house hacking? What does your travel budget look like? Backpacking or business class? How much do you realistically spend on food, healthcare, hobbies, kids, or parents? If you did an honest tracking of your last 6 to 12 months, would your lifestyle come in under $50,000, around it, or way above? Many people discover they can design a happy life for far less than they assumed, especially if they're willing to move, downsize, or get creative. Step 2. Choose your withdrawal comfort zone. Are you okay with the traditional 4% rule, which is based on historical data and assumes a portfolio with a decent chunk of stocks? Or do you sleep better using 3 to 3.5% and aiming for 30 to 33 times your expenses? If you lean aggressive, you might aim closer to 25 times. If you lean cautious, value safety over speed, and might live FIRE for 50+ years? If you want more videos where we break down intimidating financial concepts into simple, actionable steps, make sure you hit subscribe, drop a like, and comment below with your current annual spending. No judgment. I might even pick a few comments and walk through your FIRE math in a future video. And if you know someone who keeps saying they'll figure out retirement later, share this with them right now. Their future self will thank you. So, what's your number?